2023, second half onwards, we are all talking about elections. I think that's over now. Then we thought a lot about budget, that is also almost done. Policy continuation, government spending is going on, and monsoon is also good. I think if you really see the numbers, majority of the reservoirs are full now, things are better over there. I don't think there are any news from this country itself which will bring more volatility to the capital market. Now an investor, what is that he has to look at? Say, what are the negative news which may come from the other part of the world, maybe West or East Asia, we don't know. Can you throw a little more light on this particular topic, which will help our viewers to understand what are all the other factors which can bring more volatility to the market, maybe 6 months, 1 year or 2 years down the line?
I think the one fact that can bring volatility because of either global reasons, local reasons, or for no reason is the fact that the valuations are expensive. So when valuations are expensive, there will always be a set of investors who would get nervous at various points of time. It could be triggered by an event, it could be triggered by their own fear in terms of the markets are unlikely to sustain these levels, etc. So the journey is not going to be as smooth as what you see when the valuations are in your favor. So currently markets are definitely at an elevated valuation. So I think that's the biggest risk that investor has to remember. It's not that tomorrow it's going to exhibit itself or 3 months down the line it's going to exhibit. But as long as the valuations are on higher levels, any event or any non-event can also trigger those.
Market will find its reason to correct or rebalance the things.
So that's something that we need to remember. Second, between the local and the global backdrop, clearly if you look at the last 4 years, despite the kind of issues that we have
seen
around the globe, India has been very, very resilient. And not only our economy, but also our markets have done phenomenally well. Even as we speak, there are no real negative trigger points for local economy or local markets. Yes, we spoke about valuation risk, but that risk exists. But other than that, there are no real large negatives in front of us. So at this point of time, it seems like if anything were to happen, it has to happen from a global backdrop. And again, there, if you know something that is likely to come as a risk, market may not really react
too much.
So something unknown or which is not anticipated by majority of investors is something that we need to worry about, and obviously none of us know what that event is.
Correct. But just see that when Ukraine started, market reacted for a few months. But when this Israel started, I don't think market has reacted too much. And US interest rate, we are talking for almost now 2.5 years. It is like everyday story. So it is not bringing few days here and there. There is no other reason where market has seen a decent correction. So you are telling that in conclusion, there may be some reason which we haven't discussed because valuation is very high. It may find its own reasons to correct.
That's right. But as of now, the India growth story remains intact. If you are a medium to long-term investor, you can still make reasonable returns from equities. You should remain invested in equities. But obviously, you need to manage your risk through asset allocation.